Hello and welcome to everyone in the virtual classroom to learn case flow statement. Let us take a big question today, having so many new points given in it. Have a look on the question. Question number 4. Balance sheet having so many items. One for the last year, another for the current year as usual. And for the current year, that is 2020, we have to prepare the case flow statement. Then additional information. 5 points have been given for the additional information. Before we start the question, let me draw your attention for the last 2 lines of this additional information. Originally, this question was asked for fund flow statement question in Gujarat University TY examination. So this question was originally there for the fund flow statement in Gujarat University TY April examination. Today I have selected this question for the case flow statement also. Why? There is a reason. Let me draw your attention, let me remind you that we have already completed this question in fund flow statement also. If you watch, if you listen, fund flow statement video lecture number 4, in which this question has been taken as question number 2. Fund flow statement video lecture number 4, question number 2. So same question was there, and today we are taking the same question for this case flow statement also. There is an object. By studying the same question under the fund flow as well as under the cash flow, you can satisfy yourself and you can understand the difference between fund flow statement and cash flow statement. So once you complete this particular question, you may re-listen fund flow statement video lecture number 4, and then afterwards once again this particular question for the cash flow statement. Very easily you would be able to understand fund flow and cash flow because a same question has been selected for both the topic. So just with this observation, with this remark, let us start this particular question. Let us decide the profit of the year. As always, first of all, we have to decide the profit of the year. Have a look on the liability side. Profit and loss account. 1 lakh rupees current year's balance, last year's balance 80,000. Profit and loss account. 1 lakh minus 80,000, that gives the profit of the year rupees 20,000. Let us report it in the cash flow statement under first title, cash flow from operating activities. Net profit of the year 1 lakh rupees minus 80,000, balance of current year 1 lakh minus balance of last year 80,000, that gives the profit of the year rupees 20,000. Difference of balances of profit and loss appropriation account during the period of 2 balances, 20,000. Let us start the additional information. Point number 1. I am reading it. During the year, company had redeemed redeemable preference shares with 5% premium after serving necessary requirements of Act These words are very important. After serving necessary requirements of Act means Companies Act. For the purpose of redemption of preference shares, the amount of rupees 1 lakh has been transferred from general reserve. So over here, redemption of redeemable preference share capital has been given with instruction that after serving necessary requirements of the Act. Those requirements have not been given over here. You know, one topic was there, redemption of redeemable preference share capital in your corporate accounting that you have already studied. Same RPS redemption was there in the fund flow statement also. So if you have learned the fund flow statement very well, you know it very well. Which are the provisions of the Companies Act applicable for the redemption of RPS? But even though, let me remind you for some of the important provisions of the Companies Act that is related with the accounting procedure. Because once we start this calculation, you will have to implement those provisions especially related with accounting procedure. So I am not giving all the provisions of the Companies Act related with RPS redemption, but I am giving some important provisions that are related with accounting procedure of RPS redemption. Listen it carefully, one by one. Provisions of Companies Act for RPS redemption, some important provisions related with accounting procedure only. Number 1. Only fully paid up preference shares can be redeemed by the company. Only fully paid up preference shares can be redeemed. It means partly paid up shares cannot be redeemed. Number 2. Preference shares can be redeemed either from A. Distributable profits of the company that would otherwise be available for dividend, or B. From the proceeds of a fresh issue of shares which made for the specific purpose of redemption of preference shares. And company can combine both this option also, A and B, for the purpose of redemption. So two options are available for the purpose of redemption. Once again I am repeating, distributable profits of the company that would otherwise be available for dividends, and number B, from the proceeds of a fresh issue of shares which made for the specific purpose of redemption of preference shares. Simultaneously, both the options can also be utilized by the company for the purpose of redemption. Number 3. Third provision. If shares are to be redeemed from distributable profits, then an amount equivalent to nominal amount of shares to be redeemed should be transferred or credited to capital redemption reserve account. It means if company wants to use distributable profits for the purpose of redemption of RPS, then an equivalent amount to nominal amount of shares to be redeemed must be transferred or credited to CRR account. Fourth provision. If redemption is to be made with premium, then this redemption premium is an expenditure for the company and it should be met or provided either from A. share premium account balance, or B, from distributable profits of the company. And sometimes both the options can be utilized or applied simultaneously. So either from share premium account balance if it is available, or from distributable profits of the company. And both the options can also be applied, depends on the situation. And fifth provision, after redemption of RPS, balance of CRR, that is capital redemption reserve account. Balance of CRR account can be utilized for issuing bonus shares to existing shareholders of the company. Only one use has been allowed for the balance of capital redemption reserve account. It can be utilized after the redemption of RPS for the purpose of issuing bonus shares to the existing shareholders of the company. Only one use has been allowed for the balance of CRR. So these were some of the important accounting provisions of the Companies Act related with RPS redemption process. You have to remember this provision because in practical question, wherever RPS has been given, you will have to apply these provisions of the Companies Act related with RPS. क्योंकि ये क्वेश्चन में आपको नहीं बताएंगे कि these are the provisions that you have to implement. जैसे यहाँ कहा है कि after serving necessary requirements of act, so you must be able to know which are the important necessary requirements of the act that you have to fulfill, that you have to observe. Okay, let us start it. Let us implement it. RPS redemption. Let us prepare a working note for the RPS redemption. Working note number 1. Have a look. Redemption of preference share capital. Over here in the question, in that point number 1, amount of redemption of preference share has not been given. So how can we decide it? Let us verify the balance sheet. What is the position of preference share capital over there? Have a look, liability side. Second item, 10% redeemable preference shares of rupees 100 each. Last year 1 lakh, current year nil. What does it mean? It means entire balance of preference share capital has been redeemed in the current year. Entire balance of rupees 1 lakh, and this redemption has been made with a 5% premium as said in additional information point number 1. So let us start the working note. Amount of redemption of preference share has not been given, but from the balance sheet or from ledger account we can decide it. That entire opening balance has been redeemed with 5% premium. So how much amount, total amount required for redemption? Nominal amount of RPS 1 lakh, redemption premium at the rate of 5%, 5% of rupees 1 lakh 5,000, that gives total 1 lakh 5,000. So we decided the total amount of redemption. Now let us implement the provisions of the Companies Act by preparing a chart. Planning of redemption. As per our last calculation, total amount required for RPS rupees 1 lakh 5,000. Having two components, nominal amount of RPS 1 lakh and then redemption premium on RPS rupees 5,000. So we bifurcate the total amount required 1,05,000. Why we bifurcated it? Because the provisions of the Companies Act are different for both these components. One is nominal amount 1 lakh, another is redemption premium rupees 5,000. तो दोनों के लिए provisions separate है, and that is why we gave the bifurcation. In point number 1, it has been said that for this purpose, company has transferred rupees 1 lakh from general reserve. So instruction is very clear that company has utilized distributable profits which is otherwise available for the purpose of dividend. So general reserve has been utilized, and that is why, as per provisions of the Companies Act, company had to create a CRR from general reserve. So from general reserve transferred to CRR account. Then redemption premium. Over here, provisions are very clear. Either this premium should be made from share premium account balance if it is available. This premium is an expenditure, while share premium is a special income. Premium versus premium, ideal matching. So if share premium is available, this expenditure of redemption premium should be made from share premium account. And if share premium is not available, then there is no option but to write it up to the profit and loss account. Let us verify the balance sheet. Do we have any share premium balance available in the balance sheet? Have a look on the liability side. Third item, share premium. Opening balance nil, but closing balance 75,000. At the end of the year, company is having 75,000 worth of share premium. And we need only rupees 5,000. So sufficient amount is available in the share premium account. So from share premium account, this 5,000 will be provided. So from share premium account. So by this way, by preparing the chart, you have to show that provisions of the Companies Act have been fulfilled by this way. Once the chart is ready, on the base of this chart, you can pass the necessary journal entries one by one. Have a look. Journal entries. First of all, in the board meeting, a resolution would have been passed for this decision, and the journal entry for the resolution would be preference share capital account debited rupees 1 lakh, redemption premium on RPS account debited rupees 5,000, to preference shareholders account credited rupees 1,05,000. This is for the decision of the board of directors for the redemption of RPS. Now, how the provisions have been fulfilled? For that, on the base of your chart that just be prepared, second journal entry, general reserve account debited rupees 1 lakh, to capital redemption reserve account credited rupees 1 lakh. Third one, share premium account debited rupees 5,000, to redemption premium on RPS account credited rupees 5,000. Provisions have been fulfilled. Now payment can be paid, and the last J for the payment, preference shareholders account debited to bank account credited 1,05,000. These were the journal entry for the redemption of RPS. Let us give the posting in the concerned ledger accounts related with RPS redemption one by one. First J was preference share capital account debited rupees 1 lakh. Redemption premium on RPS account debited rupees 5,000, to preference shareholders account credited 1,05,000. Opposite narration, opposite amount. To preference share capital account, to redemption premium on RPS account. Total you credited 1,05,000. Second journal entry, GR account debited. GR account debited, this is the general reserve account, opening balance, closing balance. GR account debited rupees 1 lakh. 2. CRR account credited rupees 1 lakh. This is the CRR account. No opening balance, no closing balance. CRR account credited 1 lakh, opposite narration by GR account. Third journal entry that has been passed. Share premium account debited. Have a look. This is the share premium account. No opening balance versus closing balance 75,000 as we saw in the balance sheet also. Now the posting of this journal entry. Share premium account debited rupees 5,000 to redemption premium on RPS account credited rupees 5,000. Provisions have been fulfilled. And now the fourth journal entry, the posting of which preference shareholders account debited rupees 1,05,000 to bank account credited rupees 1,05,000. Posting is over. Let us close the concerned ledger accounts related with this RPS redemption process. First one, preference share capital account. It's over. Opening balance, no closing balance, 1 lakh, 1 lakh. Share premium account. It cannot be closed. There is a closing balance of 75,000. Posting of this 5,000. That gives the total of 80,000. And there is no opening balance. So wait. अभी ये बंद नहीं हो पाएगा. Means आगे कुछ मिलने वाला है इस transaction के लिए. Redemption premium. It's over. 5,000, 5,000. Preference shareholders account. It's over. 1,05,000, 1,05,000. Then GR account. Opening balance 120, closing balance 50,000. Posting of this 1 lakh transferred to CRR. Debit side looks bigger, total of which is 1,50,000. Put it on the credit side 1,50,000. That gives a balancing figure of rupees 30,000 on the credit side. What it could be? Apply the common accounting sense and knowledge. It must be the current year's saving, which would have been made from the profit and loss account. Profit and loss appropriation account debited to GR account credited, transfer. Current year's saving. CRR account. There is a 1 lakh rupees balance. Wait. A second additional information has been given related with this CRR. So we cannot close it right now. Cash flow impact from GR. See, title came profit and loss appropriation. It is a non-cash item, merely transfer from profit and loss to GR. So as a non-cash item, this will be added back in the current year's profit once again to arrive for cash profit generated from business operation. Nothing is new. This type of transactions you have already verified previously also. While from these 4 ledger accounts, preference share capital, nothing is there which can affect the cash flow statement. Share premium is still open. Redemption premium on RPS, nothing is there, neither cash bank nor profit and loss. But in this preference shareholders account, on the debit side, title came bank. It indicates application of fund. So in the cash flow statement, under financing activities, redemption of RPS 1,05,000. So let us report this 2 entry, one from general reserve and second from this preference shareholders account in the cash flow statement. Have a look. Title A, cash flow from operating activities. We already decided the profit of the year, rupees 20,000, and now adjustments for non-cash and non-operating items. Transfer to general reserve plus 30,000. Then payment. Under financing activities, C. Cash flow generated from financial activities or financing activities. Redemption of RPS with premium minus is a sign for cash outflow 1,05,000. So we gave the impact in the cash flow statement for RPS redemption. So see the big process of RPS redemption. Provisions of the Companies Act, detailed working note, chart, ledger account, posting, and impact in the cash flow statement. Okay, after RPS, the next point, additional information, point number 2. During the year, company has distributed one bonus share for every 2 equity shares from capital redemption reserve. It means CRR has been utilized for bonus issue. As we already discussed the provisions of the Companies Act that CRR can be utilized only for issuing bonus shares to the existing shareholders. So once RPS is over, CRR can be utilized only for this one object, and that has been implemented by the company over here. 31st March 2019 is the record date for the purpose of issuing bonus shares. Before we prepare the working note, let us verify the position of equity share capital on the record date, which is 31st March 2019. Have a look on the liability side. First item, equity shares of rupees 10 each. 31st March 19 position 2 lakh. Shares of rupees 10 each. So record date 31st March 19, position of share capital rupees 2 lakh, rupees 10 each. Let us prepare a working note for this transaction, issue of bonus shares. Second working note, issue of bonus shares. Ratio is 2:1 given in additional point number 2. Record date is 31st March 2019. As we already saw in the balance sheet, on 31st March 2019, equity share capital was rupees 2 lakh, having a value of rupees 10. So that gives 20,000 equity shares on the record date. Apply the ratio 2:1. For every 2 shares, 1 new bonus will be given. So for 20,000 shares, how many bonus shares would have been given by the company? That gives 10,000 shares of rupees 10 each, and the amount is rupees 1 lakh. So we decided the amount of bonus issue. Journal entry, CRR account debited 1 lakh to bonus on equity shareholders account credited 1 lakh. And then second, bonus on equity shareholders account debited 1 lakh to equity share capital account credited 1 lakh. तो अल्टीमेटली बोनस क्रेडिट बोनस डेबिट हो गया, तो क्या रहा? CRR डेबिट 1 lakh टू इक्विटी शेयर कैपिटल अकाउंट क्रेडिटेड 1 lakh. तो 2 में से एक हो जाएगी, CRR डेबिट to equity share capital account credit. Let us give the posting in the concerned ledger accounts, CRR and equity share capital account. See the posting. CRR account debited to bonus on equity shareholders account credited 1 lakh. Equity share capital account, opening balance 2 lakhs, closing balance 4 lakhs, posting bonus on equity shareholders equity share capital account credited 1 lakh. Posting is over. Close the account. CRR account is over, 1 lakh, 1 lakh. No balancing figure, it's over. Equity share capital account, still something is there later on. One point has been given related with equity share capital, that is for the conversion of debentures, and that is why at this point in time you cannot close this equity share capital account. So wait. Cash flow impact, bonus always being given free, तो ये cash flow को affect नहीं करता है. CRR account is over And as I told you, it doesn't affect the cash flow statement. Next point. Point number 3. I am reading it. Have a look. During the year 2019-20, the company has converted 50% of convertible debentures, 50% of convertible debentures into 2000 equity shares of rupees 10 each. So here the amount of conversion of debenture has not been given. Only it has been said that 50% of convertible debentures. So let us verify the debentures in the balance sheet and find out the amount of conversion of debentures. Have a look on the liability side. 13% convertible debentures. Opening balance 2 lakh, closing balance 1 lakh. It means exactly 50% debentures have been converted into equity shares. 50% of 2 lakh is 1 lakh. So 1 lakh worth of debentures have been converted into equity shares and the remaining 1 lakh has remained as a closing balance. In lieu of this conversion, क्या दिया है कंपनी ने? 2000 equity shares of rupees 10 each. 1 lakh worth of debentures have been converted and in lieu of the conversion, company gave 2000 equity shares of rupees 10 each. तो इनकी तो वैल्यू बनेगी 20,000 जो इक्विटी शेयर्स दिए हैं. What does it mean? Something is hidden. When a running company converts the debenture into equity shares, तब वो अपनी मार्केट प्राइस से कन्वर्जन करती है. Company ran the business for so many years and if it is a profitable company, obviously company would charge the prevailing market price for the conversion of debentures into equity shares. Debenture holders took interest for so many years from the company and now as per the terms and condition of the debentures have been converted into equity shares. So hidden point is that company has charged the market price for the conversion of this debenture. Face value is 10. But can you imagine what would be the market price of the equity shares of the company? Have a look on this working note, conversion of debentures. Directly the amount of conversion of debenture has not been given, but comparing the two balances of debentures account in the balance sheet as we already verified, we can decide it and it is rupees 1 lakh, that is 50%. And 2000 equity shares of rupees 10 each, that is total 20,000, have been given for this conversion. It means the remaining amount must be the share premium, which is 80,000. 1 lakh is the amount of debentures. In exchange, in lieu of the conversion, equity shares 2000 have been given. 2000 into 10, 20,000. So 1 lakh minus 20,000, remaining 80,000 company has charged for the share premium. It means 2000 shares into 50, that gives 1 lakh. So you can say prevailing market price of the equity shares of this company may be hovering around rupees 50 in the market. तो कंपनी ने ये 50 रुपीस की मार्केट प्राइस इक्विटी शेयर्स की चार्ज करी है ये कन्वर्जन के लिए डिबेंचर होल्डर्स के लिए. आउट ऑफ 50, 10 has been credited to equity share capital account and remaining rupees 40, 2000 into 40, 80,000 has been credited to the share premium account. So this is a good point of the question. Hidden point of the question. It verifies your knowledge about the stock market also. Let us pass the journal entry. Number 1. Debentures account debited rupees 1 lakh to debenture holders account credited rupees 1 lakh. Second, Debenture holders account debited rupees 1 lakh to equity share capital account credited rupees 20,000, 2,000 into 10 face value. 2. Share premium account credited rupees 80,000. तो 40 rupees पर शेयर लिया प्रीमियम के लिए and 10 rupees for the nominal value, for the face value. 2,000 into 10, 20,000. 2,000 into 40 for the share premium, 80,000, total 1 lakh. I hope this point would be very clear in your mind. It is a good point. Let us give the posting in the concerned ledger accounts for this item of conversion of debentures. Have a look. First J, debentures account debited rupees 1 lakh to debenture holders account credited 1 lakh. Second J, debenture holders account debited rupees 1 lakh to equity share capital account credited rupees 20,000. C. Opposite narration, debenture holders account 20,000. To share premium account credited. Now 80,000 has arrived in this share premium account. To share premium account credited rupees 80,000. From this 80,000, company write off rupees 5,000 for redemption premium on RPS. Earlier we already saw it. And remaining 75,000 remains as a closing balance in this account. ये बैलेंस शीट में भी हमें दिख रही थी क्लोजिंग बैलेंस शेयर प्रीमियम अकाउंट की. So conversion of debentures over. Let us verify the cash flow impact. Does it affect the cash flow? No. सिर्फ डिबेंचर का कन्वर्जन किया है इक्विटी शेयर कैपिटल अकाउंट में. Debentures account opening balance 2 lakh, closing balance 1 lakh. This is the posting. Account is over. Doesn't affect the CFS. 20,000 credited to equity share capital account and 80,000 credited to share premium account. Now share premium account is over. 80,000, 80,000. Nothing is there that can affect the cash flow. Now let us close the equity share capital account and find out the balancing figure. Total of debit side looks bigger, 4 lakh rupees. Put it on the credit side, 4 lakhs. And that gives a balancing figure of rupees 80,000 on the credit side. What it could be? It must be a fresh issue made during the year. And the journal entry that would have been passed. Bank account debited to equity share capital account credited, fresh issue. Cash flow impact. Title came bank, indicates cash inflow. Cash flow statement under title C. So let us report it under title C. Issue of equity share capital plus means cash inflow 80,000. So after the conversion of debentures, we prepared the working note, we gave the posting in the concerned ledger accounts, we closed the debentures account, we closed the share premium account. Nothing was there that can affect the cash flow statement, and then we closed the equity share capital account, which was showing a balancing figure of rupees 80,000 on the credit side. It was the fresh issue made during the year, and we saw that 80,000 rupees under title C in the cash flow statement as a cash inflow. Over here 80,000. Next point. Let us verify the additional information. Point number 4. Investment worth rupees 30,000 have been sold out at a profit of rupees 8,000. Worth rupees 30,000 have been sold out at a profit of rupees 8,000. It means selling price must be 38,000. Let us prepare a working note for this point of investment. Working note number 4, sale of investment. Selling price cost 30,000, profit 8,000, selling price 38,000. Journal entry, bank account debited 38,000 to investment account credited 38,000. Second, for transfer of profit, investment account debited 8,000 to profit and loss account credited 8,000 transfer of profit. Let us give the posting in the concerned ledger accounts for this item. Investment account. Have a look. This is the investment account. Opening balance 60,000, closing balance 80,000 as given in the balance sheet. Posting of the first journal entry, bank account debited to investment account credited 38,000. Posting of the second journal entry, investment account debited to profit and loss account credited for transfer of profit 8,000. Let us close the account. Credit side looks bigger. Total of credit side 1,18,000. Put it on the debit side 1,18,000. That gives a balancing figure of rupees 50,000 on the debit side. What it could be? Common accounting sense, it must be the purchases made during the current year. J. Journal entry, investment account debited to bank account credited 50,000, purchases. Account is over. Cash flow impact. On the credit side, title came bank. Sales of investment indicates cash inflow under title B, sale of investment. On the debit side also, title came bank. Purchases indicates cash outflow under same title B, investing activities minus. On the debit side, title came profit and loss. कंपनी ने ये प्रॉफिट एंड लॉस में क्रेडिट किया है. It is a cash profit, but by nature it is a non-operating income. इन्वेस्टमेंट बेचना हर दिन ये कोई कंपनी का बिजनेस नहीं हो सकता. इट हैपन्स वंस इन ईयर. सो एज ए नॉन ऑपरेटिंग इनकम, this should be the deducted from the current year's profit under the first title. So 3 entries from this ledger account that we have to report in the cash flow statement. 2 under B, investing activities, and 1 profit under the first title. Let us do it. Let us report it. Have a look. Profit on sale of investment minus 8,000. Now title B, purchases and sales. Cash flow generated from investment or investing activities, sale of investment plus 38,000. Purchases of investment minus, because it is a cash outflow, 50,000. So this was for the investment. Let us verify the next point of the question. The last point of the question. Point number 5. Rupees 32,000 have been paid as tax for the last year. And the second transaction, the amount of proposed dividend of the last year has also been paid. Let us consider tax first. 32,000 have been paid as tax for the last year. Have a look on this journal entry, working note number 5, provision for tax. Income tax provision account debited 32,000 to bank account credited 32,000. Second journal entry for the current year's provision in the form of balancing figure. Let us verify the tax provision account and give the posting for this transaction. Income tax provision account, opening balance 30,000, closing balance 40,000, posting of the first journal entry, income tax provision account debited to bank account credited 32,000. Close the account. Debit side looks bigger, 72,000. Put it on the credit side, 72,000. That gives a balancing figure on the credit side, 42,000. 42,000. What it could be? Apply the common accounting sense. It must be the current year's provision. Profit and loss appropriation account debited to income tax provision account credited current year's provision. Account is over. Cash flow impact, current year's provision, title came profit and loss as a non-cash item would be added back in the current year's profit once again. While on the debit side, title came bank indicates payment of tax. Under the first title, last and separate reporting for the income tax payment. Let us report it. Under first title, current year's tax provision rupees 42,000, income tax provision plus 42,000. Payment of tax, pending list item जिनको हम कहते हैं. In the last leg, once you make the total, then afterwards, payment of tax would be reported as a last and separate item, income tax paid minus 32,000. Once you decide the cash flow from operating activities, बाद में इनका separate और last reporting करना है पहले title के नीचे income tax paid. And now the last. Proposed dividend of the last year has also been paid. ये कहे तो भी करना है, ये ना कहे तो भी करना है. Provisions of Companies Act are very clear. Those two lines. Last year's proposed dividend would have been paid in the current year and the current year's proposed dividend will be paid in the next year. Proposed dividend. Only board of directors can propose. It cannot make the payment until and unless it receives the consents of the shareholders. तो फाइनल अकाउंट्स बनने के बाद ऑडिट होता है. इट्स अ टाइम कंज्यूमिंग प्रोसेस एंड देन आफ्टरवर्ड्स इन द मंथ ऑफ जुलाई अगस्त एजीएम टेक्स प्लेस. वो एजीएम में शेयर होल्डर्स की कंसेंट मिलती है और बाद में पेमेंट होता है. तो 19 का जो प्रपोज डिविडेंड था उनकी एजीएम मिली होगी जुलाई अगस्त 19 मींस दैट इज द नेक्स्ट ईयर. एंड वंस द कंसेंट्स रिसीव्ड पेमेंट वुड हैव बीन पेड इन द मंथ ऑफ अगस्त सितंबर 19. So last year's proposed dividend would have been paid in the current year. July, August 19 means 1920. And the current year's proposed dividend for 20, उनका पेमेंट होगा अगले साल. जब अगले साल जुलाई, अगस्त, सितंबर 20 में एजीएम मिलेगी, कंसेंट मिलेगी, तब पेमेंट होगा. तो ये कहे तो भी करना है, ना कहे तो भी करना है. By remembering these two lines, that last year's proposed dividend would have been paid in the current year and the current year's proposed dividend will be paid in the next year because it is the provisions of the Companies Act. तो इनको तो फॉलो करना है, कहे तो भी ना कहे तो भी. Let us do it. Last year's proposed dividend paid in the current year. Proposed dividend account debited rupees 20,000 paid of the last year to bank account credited 20,000. Second, current year's proposal. Profit में से लेना है. Dividend is a distribution of profit. Profit and loss appropriation account debited 30,000 to proposed dividend account credited 30,000. Give the posting in the concerned ledger accounts of proposed dividend. Have a look. Proposed dividend account. Opening balance 20,000, closing balance 30,000 given in the balance sheet. First J, proposed dividend account debited 20,000 to bank account credited 20,000 paid for the last year. Close the account, debit side looks bigger, 50,000, put it on the credit side 50,000. That gives the balancing figure on the credit side 30,000. It must be the current year's proposal जो प्रॉफिट एंड लॉस एप्रोप्रिएशन डेबिट करके ली है और ये साल के अंत में क्लोजिंग बैलेंस के रूप में यहाँ बनी हुई है. इनका पेमेंट होगा अगले साल. जैसे मैंने कहा, current year's proposed dividend will be paid in the next year. Last year's proposed dividend would have been paid in the current year. Current year's proposed dividend will be paid in the next year. तो ये इस साल की प्रपोजल क्लोजिंग बैलेंस के रूप में यहाँ बनी हुई है. पेमेंट अगले साल चुकाया जाएगा once company receives the consents of the shareholders in the AGM. Cash flow impact. Debit side title came bank indicates cash outflow under financing activities. On the credit side title came profit and loss. It's a non-cash item. It's a non-operating item. So under the first title we will add back it. Let us do it. Under the first title, add back the current year's proposed dividend plus 30,000. While the payment rupees 20,000 under title C, proposed dividend of last year paid minus 20,000. So this was the impact, costing and cash flow impact for proposed dividend. All the additional information point got over. Let us verify the balance sheet for the remaining items of the question. Balance sheet reading. Come on the asset side first. Goodwill 50,000 versus 35,000. It means goodwill worth of rupees 15,000 has been written off in the current year. Profit and loss account debit to goodwill account credit. But it's a non-cash item and that is why it should be and it will be added back in the current year's profit once again under the first item. Goodwill written off plus 15,000. Once again balance it. Asset side, after goodwill, machinery 5 lakh versus 5 lakh 50,000. Very simple assumption. It means during the current year, company has purchased additional machinery worth rupees 55,000. Machinery account debited to bank account credited. So it indicates cash outflow under investing activities. Title B, purchases of machinery minus 55,000. Minus is a sign for cash outflow. Once again, let us verify the balance sheet. After machinery, investment already over, debtors, stock, prepaid expenses, 3 items of current asset. We will report it under the first title, but after deciding cash profit from business operation. Cash and bank balance को हम लास्ट में वेरीफाई करते हैं. Wait. Come on the liability side. Equity share capital over, preference share capital over, share premium over, general reserve over, balance of profit and loss account over, debentures over, depreciation fund 90,000 versus 1,15,000. You know the depreciation fund system. It was there in our last question also. By comparing the two balance, you can arrive for the assumption. But even though, let us verify the depreciation fund account. This is the depreciation fund account. Opening balance 90,000, closing balance 1,15,000. Total of debit side looks bigger, 1,15,000. Put it on the credit side. That gives the balancing figure rupees 25,000 on the credit side. What it could be? It must be the current year's depreciation. You know, under the depreciation fund system, every year amount of depreciation though would be debited to profit and loss account and credit would be given to depreciation fund account. तो ये इस साल का depreciation है fixed assets machinery पर. Profit and loss debit to depreciation fund account credit. Depreciation is always a non-cash item, so should be and will be added back under the first title. Have a look. Depreciation of the current year plus 25,000. After depreciation, depreciation fund. Let us verify the balance sheet once again. Provision for tax over, bad debt reserve, creditors, bills payable. Three items of current liability that we will report under the second title. After 1 minute wait, proposed dividend over. Now second sub reporting for current assets and current liabilities. Debtors on the asset side, stock and prepaid expenses. Likewise from the liability side, BDR, creditors and bills payable. Let us report it under the second sub-reporting in the cash flow statement. First reporting is over and the total of first sub-reporting adjustments for non-cash and non-operating items. These are the 6 items, the total of which is plus 1,34,000. That gives the cash profit before changes in working capital CA and CL 1,54,000. Now changes in current assets and current liabilities. You know the relationship. CA with cash flow, negative relationship. CL with cash flow, positive relationship. Apply it one by one. Decrease is in CA, namely debtors. Increase is the cash flow plus 50,000. Increase is in CA, namely stock. Decrease is the cash flow 60,000. Increase is in CA, namely prepaid expenses. Decrease is the cash flow minus 5,000. Increase is in the bad debt reserve. Increase is the cash flow plus 5,000. And 2 more items of the current liabilities. Decrease is in CL, namely creditors. Decrease is the cash flow minus 10,000. Increase is in CL, namely bills payable. Increase is the cash flow plus 5,000. Total of this 6 item of current assets and current liabilities plus 15,000. Earlier it was 1,54,000 cash profit as we already saw it, and now this 15,000, that gives the final answer plus 1,39,000 cash flow from operating activities. Less income tax paid, as we already saw it earlier, minus 32,000. That gives the final answer net cash flow from operating activities A plus 1,07,000. इनका आगे दोबारा यूज करना है, so A. Total of B, net cash flow from investing activities B minus 67,000. इनका भी आगे दोबारा यूज करना है, and net cash flow from financing activities C, total of these 3 minus 45,000. So A plus 1,07,000, B minus 67,000 and C minus 45,000. And now the final picture, increases or decreases in cash flow or net cash flow of entire business. A plus B plus C, that gives minus 5,000. Let us verify the opening and closing cash and bank balance from the balance sheet जो हमने पेंडिंग रखी थी. देखिए लास्ट आइटम ऑन द एसेट साइड, कैश एंड बैंक बैलेंस, ओपनिंग 15,000, क्लोजिंग 10,000. Let us report it and verify, confirm the answer. Add opening balance of cash and bank as we saw in the balance sheet, 15,000. So minus 5,000 plus 15,000, that gives the closing balance of cash and bank at the end of the year rupees 10,000. We already saw in the balance sheet. Once again let us verify the closing balance of cash and bank. Yes, it is 10,000 given over here. So our answer, closing balance of cash and bank, get tallied, confirmed, and it indicates a correct answer to your answer. So by this way you have to proceed for each and every item of the question. RPS was there in the given question. For the first time you faced it in the case flow statement. It always takes time. And then afterwards conversion of debenture was also a good point of this question. I hope all the points would be very clear in your mind. Thank you for your peaceful listening.